Stock started to pull back on Friday going into the 3-day weekend, and the question now is, are we due for a correction? First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so Friday's SPY was down 0.71%, and we are getting a rejection from that resistance zone in the low 440s, but if we start breaking above the 440s, I have the next target higher just above 448 and right around 451. Now don't assume we're going there, we need to break the 440s, which means we're going to need to break that high right around 442.7. Now if we start to pull back, we're looking for possible support right around 436 and the breakout right around 430. And remember, even if we get a pullback to the breakout and then start to bounce, this is still a bull trend of higher lows and higher highs. So the only way we're going to get bearish is if we start to break down below 436, and then in the near term we'll be looking for 430. But if we break 430, then we're likely going through a full-blown correction, which means we're going to do some backfilling of the gaps below, and we do have gaps right around 423 and down here at 407. So really the scenario right now is going to depend on whether or not SPY is above 430, because if we bounce from 430, assuming we go that low, we are still in a very powerful bull trend. And if we don't bounce from 430, then we'll be looking for lower prices and we're going to get some type of correction. So notice on Friday, we did go down on increasing volume and we are hitting some very critical resistance as we're getting a little too far overextended, which means it's completely possible we come back down towards that rising 20 daily moving average, which is also going to be right around 430. So we are at increased risk of going to lower prices. So just be aware of that and don't just assume we're going a lot lower because we still have a powerful bull trend. In order to get more bearish, we're going to need to see price action breaking through some critical support. Also pay attention to the equal weight S&P 500, which is the ETF RSP, which is trying to break out from a higher low into a higher high. Watch that resistance right around 150, because if we continue higher in RSP, that's telling us we're getting a lot more breadth thrust from the market, which means we're not just moving from the big top 10 tech companies. So going into next week, watch that level right around 442, 441, and 436. And if we continue to break higher, we're looking for 448 and 451 before we likely get that correction. On the NASDAQ 100 triple Qs, we were down 0.63% on Friday. And again, it's on increasing volume and we hit that critical resistance zone that I have between 368 and 372. So getting a correction from here would be completely normal. And just like SPY, we could come all the way down to this breakout at 355 and then still get a bounce from a higher low into another higher high and continue the bull trend. So don't rule out the possibility that we are pulling back to 355, and that's also going to be right around the rising 20 daily moving average, which would be a completely healthy pullback within a bull trend, and we are getting a little too far overextended. So we could be due for a pullback towards that rising 20 daily moving average and support zone right around 355. If we break below 355, we're looking for stronger support right around 348 to 347. And if we break that, we're looking for 337 and the gap fill at 333. Again, nothing guarantees we have to get this correction. We need confirmation in the price action, and the first sign that we're going lower will be a breakdown below 365. In the Dow Jones, we were down 0.53% on Friday, and again, increasing volume and getting rejected right below that resistance at 346, and we're bullish above the breakout at 340 and 336. So if we start to lose that support, then we can get a lot more bearish. If you look at the Dow Jones, we have the bull trend, so any higher low pullback is likely going to get bought up before the next higher high because of the fact that we're in a bull trend. The Dow Jones can push higher above 346 next to the next higher target at 353, but wait for the confirmation of the breakout. On the Russell 2000 IWM ETF, we were down 0.8% on Friday and still getting rejected from that resistance at 188 and still above the support at 184. So it still looks like a bull flag in a trading range between 184 and 188. So it's likely going to be a $4 to $5 move on a breakout. Above 188, we likely go to 195, and below 184, we're likely coming back down to 180. On the ARKK ETF, we were down 0.52% on Friday, and we tried to break that resistance at 44.5, but instantly got rejected and closed down below it. So if we continue to see selling from this level, look for support at 43 and 42, and if we break above it, the next target higher is 45.7. On the VIX, we were down 6.63% on Friday, still getting rejected below 15. And all I can continue to tell you is this is still a low fear environment, which is indicative of a bull trend. And we're not getting bearish until the VIX starts spiking out above 20. And we are still in this very low fear environment of VIX below 15. On Bitcoin, we're currently trading right around 26,450, and we're sitting right at the negatively sloping 20 daily moving average, and we still have the bear trend as long as we're trading below 28,000, and we're getting more bullish if we break out above 28,000. I still have this price target that we have not yet hit, which is down here right around 24,000, so as long as we have the bear trend, we're likely trending lower. On Amazon stock, we were down 1.27% on Friday, closing back down below the 5 EMA and sitting right on top of the support zone right around 125, and we have stronger support down here right around 121. If we break below 121, look for a full-blown correction that could bring us back down towards 113 to 115. If we get a bull breakout, we need to break above 128, and then we'll be looking for targets higher at 133 to 134. On Microsoft stock, we were down 1.66% on Friday, and we're bullish above 336, and we did hit an intraday all-time high, which was right up there above 350. Apple and Nvidia have all-time highs, so don't be surprised if Microsoft is next, but you need to wait for confirmation of that break above 350, and then that's going to be a risk level. Otherwise, you're watching for support at 336, and if we break down below that, we're likely coming back down towards 323. On Nvidia stock, we were up 0.09% on Friday, and we're still hanging around this price target that I have at 427, and that was the target I told you we would likely hit on a break of this bull flag, so that has now played out, so we can delete that arrow, and if we continue any higher, we'll be looking for 448. Now be very cautious on this stock because I think we have exhausted a lot of the upside move, and even though we can go higher, I would not put your money on it unless you're tightly managing risk right here, right around 427. If we break below 427, as you can tell from the chart, that means we could come all the way back down to 398 to 374, and that's just a lot of risk to take on at these levels. On Tesla stock, we were up 1.81% on Friday, and we did fully close the gap and hit the price target at 262, and we have the next upside target at 268. But once we hit these targets, I do think we are going to see a pullback to close the gap at 235. So if you're still bullish on Tesla, be very cautious of this pullback from this resistance zone between 262 and 268. Doesn't guarantee I'm right, but just manage risk accordingly because we don't have a higher low pullback from this very impressive bull rally. On Apple stock, we were down 0.59%, still trading around that breakout at 185, and we're still bullish above 185 and 182. If we break those support levels, we'll be looking for a pullback down to 179, 177, and the gap fill just below 176. As you can tell from the volume, there was huge selling on Friday, so we could see a lot of profit taking at these higher levels. On the financial sector, we were down 0.21%, still trading around the 200 daily moving average, and we're only going to start getting bullish on financials if we can start breaking out above the 200 daily moving average and developing a bull trend. The industrials were down 0.16% on Friday, fully hitting the price target at 106 and instantly finding selling and rejection at that level, so now watch for support right around 104, 102, and the breakout at 101.5. The healthcare sector was flat on the day for Friday, going absolutely nowhere, but as you can tell, we have the higher high breakout above 131 with upside price targets at 134 and then 137. The energy sector was down 0.15%, starting to build out a little bit of a trading range between 82 and 80, so wait for the break of that range and then we'll likely fill the gap above at 83 or the gap below at 73. So jumping back over the S&P 500, I do think we are at elevated risk of a pullback that could eventually lead into a full-blown correction because I think a lot of the big tech companies need a solid correction before they go any higher, and a lot of them are now pushing all-time highs. Remember, that's just an idea. You need to let the price action confirm it, which means we need to see the price action rolling over and breaking through support. Don't just take my word for it that we're going through a correction. Even though I think it's very likely, we have no confirmation from the chart that tells us we're going through a correction yet. So as I always tell you, let the price action do all the talking and continue to follow the trend because the trend is your friend until the end, and this is still a bull trend until it's not. So wait for price action to confirm a rollover and a short-term downtrend. If you follow the chart, you're going to be a lot better unbiased trader, so just let the price action do all the talking and manage your risk around these critical levels. Don't forget I have my own trade alert service called Bank Trade Alerts, and I also have the Stock Channel Trading Discord community. You can find out more information about either of those services and how to join by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.